Welcome to Markets Now. I'm Michelle Rook along with Rich Nelson with Allendale. Livestock futures leaning mostly lower, except for a few contracts like in the feeder market and over in the grain trade. We are seeing some mostly higher prices in the wheat market today, a little more mixed in corn and soybeans. And Rich, let's talk about grains. Corn market, of course, we're trading an old crop versus a new crop situation there, weather versus maybe what we're going to see in the WASDE report in terms of ending stocks tomorrow.
No, certainly right. And, this morning's weekly export sales really don't help out the cause right now for higher prices. Looking at the corn side, this morning's sales were 61% below the 5 year average. Soybeans were 53% below the 5 year average. So we've got poor sales on corn, 8 weeks in a row, 18 weeks in a row on soybeans. So you mentioned this old crop story. So if you believe the export sales numbers, you've got to take a huge hit to export sales on Friday's supply demand report. On the other hand, a lot of people still pointing out maybe these 2022 fall harvest projections were maybe a little high. So this discussion about the old crop side is certainly a good question. Certainly for the new crop side, so, still waiting on this weather scenario to really play out right.
Obviously, that's why we're seeing, in part, why we're seeing these bull spreads work. So, talk about those inverses because I think the July August inverse or that spread has hit a record level. Corn, we're still seeing the inverse spreads working there, the bull spreads working. So, that's an indication, isn't it, of still tight old crop demand?
It is, and it tells us a different story than what we can see directly in front of us with these export sales numbers. And to be clear, I mean, we're so far off the export sales, you could see, quote unquote, as much as 100 million bushel eventual movement from USDA's current numbers. On the other hand, like you mentioned, though, these old crop markets are still doing quite strong compared with new crops. So there's a lot of questions about what's still lined up with this. And actually, we probably have to wait till the end of this month with that quarterly grain stocks report, maybe to get a better understanding of really this current old crop situation.
Yeah, do you think we're gonna get, do we have enough corn and soybeans here, old crop, to get to the next marketing year here or to the next crop? Is that kind of maybe what we're gonna see here, or is it gonna get pretty explosive, especially on soybeans with the ending stocks figure so tight?
And that's a good question. For myself, I'm not too concerned about this issue. I do think that old crop stocks are quite adequate for both corn and soybeans. Again, the question for us is the known issue in front of us of terrible export sales. But I think a lot of us are still wondering what the true situation is. So it's still weeks away from learning what could be seen here as far as the remainder lined up here by the end of the year. No doubt about that.
You bet. So we usually don't see a lot of adjustments in the May WASDE report. You're suggesting that maybe we could see some demand shifts. Will USDA totally leave the supply side alone here in terms of yield and all of that?
They sure should. For corn, they've adjusted yields in the past 25 years, 5 separate times for the June WASI report itself. So they can. USDA certainly can. But as we all know, early summer weather is not a determinant of final yields. And USDA does know this as well. It's really the July weather scenario we have to really be concerned about. Now, one thing complicating this issue, as we all understand this morning's weekly update for the drought monitor maps, this idea you have 45% of corn area within a D1 to D4 drought scenario. So USDA's got an interesting card to play. For ourselves, we suggest no change in corn or soybean yields tomorrow, but they could do a little bit for corn if they wanted to.
Yeah, and sometimes they do that, don't they? Just because they want to be able to adjust everything once we get those acreage numbers in at the end of the month, right?
And that sure is right. And keep in mind, our version of USDA these past 5 to 10 years has been maybe a little more active in recognizing problem scenarios as they're starting to play out. So for ourselves, we see it as a small chance, but we will say there is a chance for them to recognize it. Keep in mind for soybean yields specifically, they have not changed them anytime on this June supply demand report. So no change in soybeans at all likely. For corn, a small chance of a yield change.
The market seems to be really focused on this idea that we are going to get this big pattern shift to El Nino, though, coming up. And so that's really been kind of keeping a lid on these rallies in new crop corn and beans, hasn't it?
It certainly is. And, we're still concerned about this small dispute between the government weather agencies and what some private forecasters still suggest might be some problems, at least into early portion of July. So this debate is still ongoing right now. The El Nino even makes it more concerning because there's not a good track record for El Nino and Northern Hemisphere summer weather. So frankly, a lot of us are still quite concerned. One thing to point out, though, is between corn and soybeans, it'll take about a 10 to 15% deviation from trend yields. So a 162 bushel per acre corn yield to get us 30 cents higher. So corn is more or less pushing a boulder up a hill as these yield deviations hit. One thing different though is the new crop soybean discussion. Now for new crop soybeans, you take about a 7% yield deviation, which is not that aggressive given our weather scenario. You can have almost a $2 rally. So we have a potential,
Wow.
depending on what's lined up with this weather scenario.
Well, that's a shocker there. Okay, wheat market. We're back up here today after a pretty good sell off yesterday. Is this all just short covering and technical action, or is there something fundamental that's pushing it?
We still think on the wheat side, there's this large debate between the problem that we all know which is U.S. wheat prices are still clearly overvalued versus our competitors on the world market. $50 per ton over France, $70 to $80 per ton over Russia. So we have that overhang. On the other hand, there's still this legitimate concern about El Nino dryness for India's crop. You've got Australia's crop and certainly some concerns about the Ukraine crop in recent days as well. So, kind of a balance between some sharply contrasting forces.
Yeah. Do you think we're going to see any evidence of that on the world numbers coming up in the report tomorrow, or is it too early for that?
For these numbers, I do think USDA could adjust the Australia number, perhaps down 1 to 2 million tons. Australia's government dropped theirs by about 3 million tons compared with USDA. So USDA generally does watch the Australian government a little more. So we may see Australia recognized. I would not expect to see China's wheat crop dropped on tomorrow's report. So that's another question for us in the short term. As far as Ukraine crop numbers, I don't think they're going to hit these either. USDA is a little bit lower, 16.5 million tons than the Ukraine government. So USDA has a little cushion, at least on this one.
Okay. And speaking of Ukraine, it feels like this market is really getting Black Sea headline fatigue.
Boy, it sure is. And this whole discussion about the renewal up ahead here in a month and a half. You've got the questions for us about the recent dam break, whether this adjusts the issue, the ammonia pipeline discussion as well. So a lot of questions right now, and I don't think any of us have many clear answers in the short term.
Cattle market, let's go over there. Record highs in the cash trade yesterday. We had all-time highs over on the futures, and then we saw a pretty good sell-off and some key reversals in the back months. Did we top this market yesterday?
Boy, if you're a chart trader, you're going to say so, yes. If you're a fundamental trader, you're looking at things like choice wholesale beef up today, another 255. Over the past 10 days, we've added $29 per hundredweight to choice beef. So you can't quite make the argument from a fundamental basis that it's all done yet. Chart wise, boy, you really want to say this market did clean out every bullish hope. So we'll definitely see. Right now, I'm not convinced either way, but certainly from a concern about summer pricing, perhaps we do have a little bit of premium.
Yeah, and cash trade up sharply, and we're still seeing bids coming in today at higher money. So obviously
Yeah.
the Packers are still pretty short here, it looks like.
And that's the issue. On a fundamental basis, we're still getting some continued good news. Like we mentioned, morning beef, like you mentioned here with the current bid situation for
Yeah.
remaining week sales. So there's a lot of questions about perhaps another week ahead, maybe in front of us. So it's certainly a big question as far as short term strength, how much longer we can trade based on this Texas story, which may at least go into next week here.
Yeah, do you know how many head were lost in that Texas flooding situation?
Whether it's the rumors of 10,000 head or 25,000 head, I'm not quite sure myself. I certainly would suggest from a weight standpoint and from a number of head being marketed over these next 3 to 4 weeks, I do think there's more of a valid discussion pointing out that on a weekly basis, we may see some poundage drop on this one, which is perhaps a bit more than just the death loss we may see.
And let's kind of wrap up on the hogs here. We had big week up week last week by 10.5 bucks on the June, and then followed up here the last couple of days with some profit taking. Do you think that the futures are just getting ahead of the index? Is that what's slowing this down, this momentum, or what is it?
I do think the main story for us right now is a more or less an exhale of breath, so to speak. We've had this bear market run for quite some time. Those record fund shorts in hogs, which were in place through last Tuesday. So we can perhaps argue profit taking from this issue. We're now seeing confirmed sow slaughter, which is finally showing up as well. So that's a little positive news for the long term picture. And the fact we have some more clarification on the Prop 12 issue, which has eased a little concern. So there's a valid reason for us to come off these lows. I'm not quite sure how much higher we can go past these current prices, though.
Yeah, that Prop 12 situation, just the uncertainty about it may be what kind of caps the rally here, maybe above 90, or where do you see us running into big resistance?
Frankly, I think anywhere about $2 higher from here. I do think that the concern for us is, though it's true that the California regulators will not be as hard handed on this issue as we expected after July 1. So that's a little positive. But the question for us is, how much do we develop this two-tiered pricing strategy in the U.S., this California versus everybody else market structure? So I still think that this is definitely a barrier to us at about $2 higher from your current pricing.
All right. Thanks so much for joining us. Rich Nelson with Allendale. That is Markets Now.